In this video, I'm going to break down how the taxes work in real estate in India. So first of all, we assume that you're buying a house or an apartment. The first tax that you have to pay as a buyer is GST, TDS and stamp duty. Let's start with GST. If you're buying an under construction unit, it costs about 5% for a residential unit and 18% for a commercial unit. If you're buying an already constructed apartment or a house, then there's no GST. TDS is 1% which you deduct from the amount and deposit it with the government, and the government eventually gives it to the seller. So this is kind of tax which nobody is actually paying. This is reimbursed. You deduct it from the total amount and then the government reimburses it to the seller. Now the stamp duty and the registration, it's usually about 5 to 8% depending on the state. If you're a woman, you could get 0.5% or 1% off on the stamp duty depending on the state. Now comes the part where you're selling your apartment or house and you're expected to pay 12.5% capital gains tax. So let's say if you bought a house for 1 crore and you sold it for 2 crore, you made 1 crore profit. Now you're required to pay 12.5 lakh rupees as your long-term capital gain tax. There are two ways you can save or eliminate altogether the capital gains tax. Number one, reinvest all that money back into another residential purchase. So let's say in this case, 1 crore profit, and now you reinvest all that money in an apartment, so you're no longer required to pay any taxes. But let's say if your apartment is 50 lakh rupees, then you're going to be taxed at 50 lakh rupees, which is like 6.25 lakh rupees something. Another way to save yourself from the taxes is that you reinvest all that money in the bonds issued by NHAI, National Highway Authority of India, or REC, Rural Electrification Corporation, within 6 months, and the lock-in period is 5 years. The maximum you can invest is 50 lakhs. So in this case, you still have to pay 12.5% on your 50 lakhs gain. And just a concluding remark, if you don't like paying 12.5% capital gain tax, and if you don't want to reinvest your money in real estate or in the bonds, consider buying lands where the agricultural income is tax-free. When you sell land, which is like a huge profit-making investment, whatever money you get, that is absolutely tax-free, tax-exempt. So let me know in the comments, what do you think about all kinds of taxes on real estate in India? Do you think it's a fair amount or do you think it should be lowered? Please let me know.